Hello and welcome to Investment Insight. Before we begin, make sure to subscribe and hit the like button. Now let's break down what's happening in the markets today in a clear and simple way.
Thanks for having me. I'm really looking forward to getting into this one.
Yeah, so let's set the scene for you listening. It is late May 2026. And, under the current Trump administration, we've kind of all gotten used to a very specific rhythm in the headlines regarding the U.S. China tech war.
Oh, absolutely. It's usually always about tariffs or physical embargoes.
Right, like embargoes on physical microchips or data security and server farms. But looking at recent analysis, the battlefield has entirely shifted.
It has. It's a massive pivot.
Yeah, because China isn't just restricting silicon or source code anymore. According to the data, they are actively restricting human beings.
Right. The focus has completely pivoted to the actual human brains behind the artificial intelligence. Top-tier AI talent is now quietly being treated as a national strategic asset.
Which is just wild to wrap your head around.
It really is. And as a result, their physical movements, specifically their overseas travel, are being heavily restricted.
And just to be clear for the listener, we are going to look at this objectively. No politics, just the facts on how this human export control actually works.
Exactly. We want to unpack why this pressure is peaking right now, and most importantly, what this geopolitical shift means for an everyday American investor just trying to manage a standard portfolio.
So when I first read through the research for today's deep dive, I literally had to read the core data twice because it felt so surreal.
Yeah, the initial reports were definitely shocking.
We're talking about recent reporting, originally from Bloomberg and cited by Reuters on May 26th. It shows that employees at major private Chinese AI companies, giants like Alibaba and DeepSeek, they now need pre-approval from the authorities before they can travel abroad.
Right, which is a huge departure from the norm.
I mean, imagine working at a private tech startup here in the U.S., like in Silicon Valley, but you have to ask the government for permission to just take a vacation to Europe, just because your brain is considered classified government property.
It sounds incredibly dystopian, I know.
Yeah.
But historically, in China, withholding passports or heavily restricting international travel, that was a bureaucratic lever reserved for a very specific subset of people.
Like military folks.
Yeah, or high-ranking executives at state-owned enterprises, top-level party officials, people like that, or researchers buried deep inside classified national defense projects.
Right, which kind of makes sense within that system.
Exactly. It was a tool for keeping the inner circle secured. But now, that net has been cast over the private sector.
It's hitting regular private citizens.
Yes. It is hitting tech startup founders, 25-year-old core researchers, and high-level software engineers who have absolutely no formal ties to the government.
But wait, is this an actual written law? Like, can I go on a government website right now and download a PDF of a blanket public policy that says, if you are a software engineer, you cannot leave?
No, you can't. And honestly, the opacity is what makes it so effective.
Yeah.
Looking at the research, this is not a blanket public law.
Oh, really? So how do they even enforce it?
It operates in a highly informal, targeted way.
Yeah.
Private companies in China above a certain size are required to have internal party organizations or cells.
Okay, I see.
Yeah, and these cells work alongside human resources and management. So the travel restrictions are often enforced through these internal channels or through individualized watch lists managed by state security.
So it's not like they just ban everyone with the title engineer.
Exactly. They aren't filtering by your corporate job title. They are filtering by your strategic utility.
Wow.
If you are a young genius who recently published a paper on making AI models run 20% faster, you might suddenly find that your passport renewal is permanently delayed, or your HR department just flags your vacation request.
Hold on. Isn't that incredibly short-sighted? I mean, these are highly educated, highly mobile people.
Oh, it is a massive risk.
If I'm a brilliant engineering student graduating from Stanford right now in 2026, and I get an offer from Alibaba or DeepSeek back in Beijing, why would I ever take it? If I know taking that job means I'm basically surrendering my physical freedom to cross a border, I'm staying in the U.S.
And that is exactly what many are doing. But we have to look at the immediate crisis forcing their hand right now.
Which is what?
The hardware bottleneck. Because of severe U.S. export controls on top-tier AI chips, China is operating at a massive disadvantage in physical infrastructure.
Right. They can't freely import the cutting-edge American chips.
Exactly. They are cut off from the stuff powering the AI boom in American data centers, so they are forced to rely on domestic chips.
Okay, let me use an everyday analogy here for you listening to try and break this down.
Sure, go ahead.
It's like being forced to race with a standard everyday car engine instead of a turbocharged one.
That is a great way to think about it.
Since you don't have the fastest engine, you desperately need the world's most brilliant mechanic to tune it perfectly so you can still win the race.
Spot on.
And those master mechanics are the AI engineers.
Yes, and the data reflects that desperate need for efficiency perfectly. According to recent market analysis from May 27th, we are seeing a massive push in domestic Chinese chip production to build that foundational infrastructure.
Right. The everyday car engines.
Exactly. Huawei's AI chip, the Ascend, is projected to hit 812,000 shipments in 2025.
That sounds like a lot.
It is. It completely dwarfs Alibaba's Zhenwu chips, which are sitting at projected shipments of only about 265,000. So Huawei is really becoming the hardware baseline there.
But those chips aren't as good as the American ones, right?
Right. Which means they are practically useless without the software mechanics who know how to optimize them.
And this is where DeepSeek enters the chat, right? Because looking at the data, they just proved this mechanic strategy can actually work.
They absolutely did. On April 24th, DeepSeek released its V4 model. And the critical detail here is that the model was optimized specifically to run on those Huawei Ascend chips.
Oh, wow. So they tuned the standard engine.
Exactly. And it performed exceptionally well. Chinese engineers are figuring out how to achieve massive efficiency without relying on U.S. hardware. They are substituting silicon with pure human brain power.
So from the government's perspective, those engineers are literally the most valuable asset they have.
Exactly. More valuable than rare earth metals.
Yeah.
If one of those engineers leaves for a lucrative job in California or attends a conference in London and just decides not to board the flight home, the state doesn't just view it as a company losing an employee.
Right. They view it as a leak of national security infrastructure.
Exactly.
Which brings us back to the Meta and Manus case study from the source material. Because I think a lot of people listening might understand a government stopping an employee from taking a vacation.
Right, just denying a visa.
Yeah, it's draconian, but it makes logical sense. But the Manus story is on a completely different level of state intervention. We are talking about the state stepping into M&A, like retroactively destroying a private corporate merger.
It is a blockbuster example. So Manus was a highly promising AI startup founded by Chinese entrepreneurs. Meta, the American giant, saw their talent and moved to acquire them.
Which is just normal business.
Right. In a normal free market, a major player buys a nimble startup, the founders get a massive payout, and everyone is happy.
But the Chinese government ordered the acquisition to be reversed.
They did?
But physically, mechanically, how does a government step in and cancel a digital transaction with a foreign buyer? Like, if the money's already wired, how do you undo that?
By squeezing the domestic pressure points. A startup like Manus usually has a complex corporate structure, but critically, they have an enterprise operating inside China where the actual engineers sit.
Oh, so they go after the local office.
Exactly. The government didn't just send a polite letter. They weaponized regulatory compliance. They can deny domestic operational licenses, freeze local bank accounts, and most importantly, physically restrict the founders from leaving the country.
So they essentially took the founders hostage.
Basically. As of May 21st, reports indicate that these founders are desperately scrambling to raise $1 billion just to buy their own company back from Meta.
Just to comply with the government's reversal order.
Yes.
That is absolutely wild. And here's where it gets really interesting for you listening. This is a massive shift for the global free market.
It changes everything.
China is basically sending a message to the world. Even if you try to move your company to Singapore or sell to an American giant, if the brains behind it are Chinese, we still claim jurisdiction.
Yeah, it redefines the concept of a sovereign border, really. In the short term, this heavy-handed approach achieves exactly what they want.
Right, it stops the brain drain immediately.
Exactly. It protects their national projects and prevents U.S. companies from just poaching their best talent with massive buyouts.
But doesn't this create a massive Hotel California problem?
How do you mean?
You know the song, right? You can check out anytime you like, but you can never leave. If you build a walled garden and lock all your best scientists inside, how do they learn?
Oh, right.
Because AI thrives on open source sharing and global conferences. If young, brilliant engineers know they might lose their freedom to work abroad later, aren't they just going to leave early or refuse to return from overseas studies?
You've hit on the exact structural flaw of this isolationist policy. Artificial intelligence requires an open mixing bowl of ideas.
Right, developers talking to developers globally.
Exactly. And the data backs this up. There is an April 2026 ArcSieve study that looked specifically at global AI patents.
Oh, what did the study show?
It revealed a fascinating paradox. China has actually surpassed the U.S. in the sheer volume of AI patents being filed.
Really? More than the U.S.?
Yes, but when you look closely at the citations within those patents, Chinese inventors still rely incredibly heavily on U.S. frontier knowledge.
Oh, I see. So they are building on American foundational research.
Exactly. If you lock your talent inside a walled garden, you might protect today's secrets, but you cut them off from the global flow of innovation. You cripple their ability to discover tomorrow's breakthroughs.
Okay, let's pivot this to the wallet. Because if you are listening to this right now, you probably aren't a venture capital fund trying to buy a startup in Beijing.
Probably not, no.
You're a regular investor trying to understand what this means for your stock portfolio. So, what does this geopolitical chess game mean for a regular investor today?
The first major ripple effect is the introduction of what we call a governance discount.
A governance discount. Explain that for us.
Sure. For investors, Chinese AI companies now carry this discount because their biggest asset, human talent, can be controlled by state whims.
Which makes foreign investment inherently riskier.
Exactly. American tech companies will now have a much harder time acquiring international startups if there is any Chinese talent link.
Because the state might just step in and blow up the deal.
Precisely. The M&A market in tech is going to see a serious chill.
Okay, but what about the actual product side? Because there is a massive piece of data from the analysis regarding pricing.
Yes, the price war. This is huge. On May 23rd, DeepSeek permanently cut the price of its V4 Pro API by 75%.
75%. That is a staggering cut.
It is massive.
Now, for anyone listening who is a beginner to all this, let me explain what an API is real quick. Think of it like a restaurant menu. An API is just the bridge that allows an app on your phone to talk to a massive AI model in the cloud.
Right, you don't build the kitchen, you just order from the menu.
Exactly. If you want an AI to generate workout plans for your fitness app, you don't build the AI yourself. You pay a fee to access an existing AI through an API, and DeepSeek just slashed that access fee by 75%.
And let me translate this into plain economics for the listener.
Please do.
If you are an investor looking at AI app developers, this is great news. Cheap AI models mean much lower costs to build apps.
Right, your overhead drops significantly.
Exactly. But if you are invested in American companies selling top-tier, expensive AI models, DeepSeek's massive price cuts are going to put serious pressure on their profit margins.
Because the American companies spent billions building these massive AI models, right?
Right. They need to charge premium API prices to recoup those massive investments.
And DeepSeek is basically walking into the market and giving it away for pennies.
Exactly. It's weaponized efficiency. The talent lockdown in Beijing has forced Chinese companies to become incredibly efficient, and they are using those low operational costs to aggressively undercut global pricing.
Wow. So it is hitting the bottom line of tech giants right here in the U.S.
Absolutely. It bifurcates the market completely.
You know, we are really watching a fascinating experiment unfold.
We truly are.
I mean, you can ban the export of a physical microchip at the border. You can stop a cargo ship. But how do you embargo an idea that lives inside someone's head?
It's the ultimate regulatory challenge.
It really is something to mull over. As governments try to build borders around human thought, the tech world and the investment landscape along with it is going to look very, very different.
It certainly is. Thank you for joining us to explore these complex dynamics today.
Don't forget to subscribe and hit that like button.